Hello and welcome to a new morning briefing presented by Stein Investments. In today's video, I'd like to start with a very interesting volume trend I observed yesterday during the New York session. And this volume trend was very special because it appeared before the pairs moved. So I'm talking about this Japanese yen trend, where we had a rising interest in Japanese yen long positions, and our strength analysis didn't react at all at this point in time, but the pairs reacted later on, and we'll see how the Japanese yen became stronger here for several hours. And to make clear what I mean in detail, I prepared a special overview here with the FX volume total volume change, the net long volume change, and the FX Power 8 hours analysis displaying solely the Japanese yen. And this move we've seen in the previous overview started here, and we are currently observing the US dollar against the Japanese yen, and this is going down. And this move to the downside affected all other Japanese yen pairs as well. This trend lasted until the total volume change and net long volume change dropped below zero to the downside, and then you see that the strength of the yen released as well. And if we go through the single pairs, we see that here this move started, and the pairs have been ranging before, and then the move to the downside followed and lasted until the volume decreased. And we see that across all the Japanese yen pairs. All other currencies were going down against the yen. And it's most interesting on the Aussie dollar yen and the New Zealand dollar. As you can see here, the volume trend started here. Japanese yen was perfectly neutral at this point in time, and the Aussie dollar yen was rising. If you see this picture, I would probably go more to the long side than to the short side. And then the yen trend from the volume side kicked in and dropped this pair down until the volume interest dropped. The same is true for the New Zealand dollar against the yen, exact same scenario. And this is pretty rare because usually at first comes the strength and the retail trading volume follows. In this case, it was the complete opposite. The retail trading volume was indicating this Japanese yen strength before the pairs and the prices reacted at all. And that's pretty rare and outlines the unique insight FX volume provides. You won't get this information with any other tool or indicator, and this is what makes FX volume so special, and we are very proud to present you this kind of data no one else provides. Now let's move on with the market analysis for today. And today we already had two major news events here, the CPI release for the Australian economy and the CPI release for the British pound, and both have been below their market expectations or the forecast as we know it, and the market reaction has been completely different. The Aussie dollar reacted positive on the news release and is pretty stable along with its correlated currency, the New Zealand dollar, and the British pound reacted completely negative to this news and was going down for a pretty long time before it's currently a bit recovering. So you see the same kind of news, the same kind of divergence from the market forecast, and the market reactions are completely different. So you can't rely on that. And it's always a kind of gambling to trade upfront news. That's why I always recommend to stay out until the news are released. Considering the volatility, we see the British pound, Aussie dollar and New Zealand dollar are in the neutral area between 100 and 111% of their usual daily ATR. The other currencies have a lot more potential, so we'll see if there is something positive for us left for today. We already got two easy scalping signals, one for the Aussie dollar against the yen, which is in a clear uptrend, but already reached 75%. This is not that much, so I thought it's worth a trade, but with a very tight stop in this case and a profit target at the next resistance level, which is more than 7 days old. And I got the same signal for the New Zealand dollar against the yen, and so I traded this one as well with the pretty much same scenario. It's not that much risk, so we see how this will turn out. Maybe it's better to place the stop a bit far away, but I don't mind because I'm more willing to achieve a risk and reward ratio higher than 1-to-1. And in this case, the resistance is more important to me because this is where the price will most probably reject and go back to the downside. And so I traded this as is. Considering our currency overview, we currently see only two really stable trends right now. One is the British pound to the downside, and the other one is the Swiss franc, which is also in a sell trend. The other ones, like the Aussie dollar and the New Zealand dollar, are in a good buy trend, in my opinion, but showing a pretty strong dynamic to the downside for a few hours now. So this is not ideal in my point of view, but it offers opportunities after these reversal moves ended, and I assume we could go for a Aussie dollar and New Zealand dollar long against the Swiss franc and the British pound, and maybe the Canadian dollar also going long against both of these currencies. So let's have a look at the corresponding charts. Here we have the British pound against the Canadian dollar. Wonderful breakout setup, but this has been triggered due to the news event. They've been released here, and so the British pound dropped and already achieved 100% ATR, which is fine, no problem so far. The point is, I don't like to hop in to a pair that is already in a stable trend move. You can also see that there is a new support level building at the 80% ATR, and so I prefer to wait until this reverse to the upside has ended, and then we'll probably get an easy scalping entry, and then we can trade in the direction of the long-term trend with a reasonable risk and reward ratio. So let's check the other pound pairs as well. Same situation here, British pound against the Aussie dollar. Was a wonderful breakout strategy setup with a double-sided dynamic starting already during the Asian session. So those who catch this by the custom alerts, breakout strategy indication benefited from an excellent move to the downside, and it's probably the same for the British pound against the New Zealand dollar, which hit the 100% ATR on the downside here as well. So congratulations for all those who caught these moves. We are not part of this, but that's no big deal. We can wait until we get the next trigger signals. So let's check how this turns out against the Swiss franc, and this is pretty much the same double-sided dynamic breakout strategy set up here during the Asian session, and the pair already moved a lot. It's currently at 88% ATR, and there is no entry trigger for us right now. It's different in this pair. As explained previously, we got our easy scalping entry in hope that this new support level will last and will go back to the upside. Situation for the New Zealand dollar, it's identical to the Aussie dollar, and this proves once more the perfect correlation of both currencies, and that's something you have to consider when trading them, because if you trade both currencies you double your risk. There is no diversification if you trade the Aussie dollar and the New Zealand dollar at the same time in the same direction. This is like trading one position in either of those currencies. So as already said, we are waiting for the next easy scalping alerts from our custom alerts tool that monitors the market for us 24/7, and we can move on to our non-Forex symbol analysis, and there it is. Bitcoin is back in an uptrend with a neutral short and midterm dynamic, because it's currently facing a big resistance cluster, and this 18 days old resistance level hold, and the price dropped back to the downside. And this proves once more the excellence of FX levels, which detects these levels, and they are extremely important for your trading decisions. Oil came with an easy scalping setup here at this point. I guess no, it was here, but it's perfectly fine. It's not moving that much, but with a stop loss here, you would already achieved 1 hour of profit, and maybe 2 if you are a bit more patient. So let's have a look at the Dow Jones. This is in a strong uptrend considering the 1 week of market data, but currently with very strong dynamic to the downside, so not worth to be traded. And the German DAX, same scenario, extreme short-term dynamic, not very interesting to trade. That said, we are at the end of this video. Thanks for watching, and please, if you have any wishes regarding symbol analysis, then just drop a line and I'll embed it in the next one. Thanks for watching, see you, and bye bye.